In this video, we break down how Vukota uses a structured playbook to navigate secular trends in alternative investments. This is for information only, not for investment, legal, or tax advice. After more than 15 years in institutional roles across venture capital, private equity, real estate, and public markets, Vukota founded VCM Global Asset Management in 2010 to focus on alternative investments with institutional discipline. His starting point is capital deployment analysis. Where is capital over-allocated? Where is it under-allocated? And how do interest rate and macro shifts change that picture over time? This lens led him to see that many high-net-worth investors and family offices were underexposed to institutional quality alternative strategies, despite alternatives becoming a large share of sophisticated portfolios. The second step is to identify long-term secular trends, like demographic shifts, technology adoption, and structural changes in financial infrastructure that can drive returns over many years. In Colorado, Vukota's team saw sustained in-migration, job creation, and a shortage of middle-income housing, particularly for households in the missing middle that fell between traditional subsidy programs and high market rents. Instead of viewing apartments as generic real estate, they treated workforce housing as a demographic-driven opportunity, aligning capital with the structural need for attainable homes close to employment hubs. That thesis turned into a scale workforce housing platform, where returns were supported by recurring cash flow and long-run demand, illustrating how secular trends, if executed well, can translate into tangible outcomes. A key part of the playbook is knowing when a theme has become crowded. Several years ago, VCM saw capital flooding into real estate, just as rising interest rates began to challenge leveraged returns. Rather than stretching for new deals in a saturated space, the firm gradually reduced real estate exposure and reallocated toward venture strategies connected to secular growth areas with more favorable risk-reward profiles. One of those areas is AI infrastructure, where multiple analyses project trillions of dollars in required data center and compute investment over the coming decade, supporting applications across industries. VCM examines companies working on compute efficiency techniques and the broader AI value chain, viewing them as part of a foundational shift in how global economies process and use data. Another core theme is global payments and emerging market fintech, particularly infrastructure behind open banking and cross-border payments in regions like Latin America and India, where digital transaction volumes are expanding rapidly. Here the focus is less on front-end apps and more on the rails and middleware that enable secure, scalable movement of money, reflecting the same preference for structural building blocks seen in prior investments. Underpinning all of this are 5 principles: a disciplined, data-driven process, strong downside-oriented risk management, a culture of excellence and integrity, alignment through co-investing, and continuous innovation in how opportunities are evaluated. Taken together, Vukota's secular trend playbook shows how alternative investments can be approached through structure and patience, rather than momentum or hype, across housing, AI, and payments. This overview is meant purely for education and does not recommend any specific investment, security, or strategy. Viewers should speak with their own professional advisors before making financial decisions.